The main theme of this entire video is that during a slow market, like the market we're in, you need to squeeze more juice. In this video, we are covering how to scale your business in this slow, crazy market that we're in. What's going on, guys? Nick Friel here, founder of Media Simplified. We are a mortgage marketing agency that helps mortgage brokers like yourself scale using online lead generation, automation, systems and processes, and we guarantee that you close more deals using these tactics. Now, we've been in the game for over 8 years. We've helped over 800 mortgage brokers across the country scale their business, and hopefully this video provides some insight for you to do the same. Now, in this video, we are covering how to scale your business in this slow, crazy market that we're in. And we're gonna use America's greatest pastime, the first business that most people get into, and that's going to be the lemonade stand model. Now, I know what you're thinking, how the hell does my mortgage business coincide at all with a lemonade stand? And that's what we're gonna get into today. The main theme of this entire video is that during a slow market, like the market we're in, you need to squeeze more juice. All right, so we're gonna use the lemonade stand for an example. So every day, this lemonade stand, in order to create their product, they need 100 lemons to create their lemonade. Now, from this 100 lemons, they're able to get about, we'll say, 30 cups of the lemon juice needed to create this lemonade. They're just squeezing it by hand, kind of tossing them to the side, not really doing anything else with them. And that's yielding them about 30 cups. So about 30% yield on the lemon juice. So from this 30 cups of lemon juice, they're able to yield about 15% as far as jugs of lemonade. So they're able to get about 4.5 jugs of lemonade. With their current process, with their current amount of lemons and lemon juice they're getting, this is what their system is yielding on a daily basis, about 4.5 jugs of lemonade. Now, say all of a sudden there's a massive nationwide international lemon shortage, and all of a sudden they can't get 100 lemons a day to create this product. All of a sudden they can only get half of the product that they were previously getting. So now they're only getting 50 lemons on a daily basis, and they need to be able to put out at least the same amount, if not more. So now with 50 lemons, what can we do besides squeeze more juice? So the best part is we might not be in control of this. We might not be in control of the outside factors, but this part of the system we are in control of. We can control the output based on the system we have in place. So now we're working with 50 lemons. Say instead of a 30% yield like we were getting previously when we didn't have any sort of system, say we put some systems in place and we get a lemon squeezer and we start using the rinds to create an extra lemon zest around the lid, and we put a couple of processes in place to make sure that we're using every part of the lemon. This is my lemon here. And instead of getting a 30% yield, we get a 20% increase on that from our system. And now we're getting a 50% yield on the amount of lemons. So now instead of getting 30 cups from the 100, we're going to get 25 cups from the 50. So not a crazy increase, but a 20% increase just from putting a system in place. Now we're working with 25 cups of lemon juice to work with. Say we can increase the back end of this where, instead of yielding 15% lemonade, we start using some of those peels that we saved. Maybe we dehydrate some or, fry some. We find another way to use these peels. We find another way to sweeten things in a cheaper way. And all of a sudden, instead of getting a 15% yield, we're getting even just a 20% yield. So a 5% increase in the amount of, lemonade that we're getting out of the lemon juice. So another small increase, and we're going to get 20%. That's actually going to yield us not 4.5, but 5 jugs of lemonade. at the end of the day. Now, once again, you're probably sitting there saying, well, how the hell does this apply to my mortgage business in any way, shape, or form? That was the lemonade stand. So here's your mortgage business. We'll say on an annual basis, you have 1,000 conversations with people. And this is when the market's hot. And a lot of times when I talk to mortgage brokers during, times where the market's really hot, they don't need leads. They don't need a system. They're doing really well. They don't need things like this because they're closing. So we're going to say on, when the market's hot, you're having about 1,000 conversations on a annual basis. And we're going to say, because you don't have systems in place and you're kind of just taking, all the low hanging fruit, dealing with what comes to you one by one, we're going to say that you have a similar yield of about 300 real conversations that turn into, something with legs. So we're going to say you have a, 30% yield, just like we had here. And from that, you're having, 300 valid conversations with potential buyers. So from here, we're going to say that you're closing, maybe the market standard of around 15% of the conversations that you have on an annual basis turn into actual funded deals where you're getting paid. In that scenario, you're getting 45 deals annually, which is maybe 3.5, almost 4 deals per month. Similar scenario. It's not lemons. Now it's the housing market. Now we're dealing with higher interest rates. We're dealing with little to no inventory. We're dealing with, people having, unsure thoughts about the future and, the election coming up. And there's all these factors of people being really worried about the financial markets. How are you going to keep your deal flow the same, without having all of these conversations coming in? And it comes back to the same thing. We got to squeeze more juice. Instead of this scenario, all of a sudden you have the same problem. The market is off. The market's terrible right now. I've heard it all. I've heard, people saying the market's great. I've heard brokers saying the market's awful. It's going to keep getting worse. Whatever the case may be, those things aren't in your control. What is in your control is having a system to squeeze more juice. So instead of 1,000 conversations, we're dealing with a year like the last couple of years, and all of a sudden your conversations drop down to just 500 conversations on an annual basis. So you're talking to half the amount of people that you were talking to just a few years ago when the market was hot. What can we do? We can't control that, but we can control having a system, making sure that every conversation you talk to has your application, making sure your application is easy to fill out and it doesn't have people stopping halfway through, making sure you get all of your prospects to start the application. And we're going to put some of those systems in place, and you start using those. We get a small increase on the amount of people that go from conversation to, actual potential. We're going to see, instead of a 30% yield on conversation to potential deals, we're dealing with a 50% yield, just like we did in the previous scenario. So you have a 20% increase in the amount of convos that you have that actually turn into deals. That increase is coming from the S&Ps that you put in place. Now, instead of 300 people, we have 250 that are serious potential prospects that may turn into something. Now from here, we're not going to have a crazy difference on the back end. We're going to say you even close at just a 5% higher rate because you've put things in place. You've made sure your application easily leads people from application to pre-approval, doc submitted, escrow. It kind of guides them down. We'll say you also start partnering with real estate agents and having them take over with some of these apps to help them push them along faster. You do some of these things and you're able to increase the amount of applications to closes by just 5%. So instead of 15%, you're closing 20% of the conversations that you had. And with that, you are looking at 50 deals. I know this is simplified, but that's for a reason, because it is that simple. Like, I think most mortgage professionals are wasting so much potential business, so much potential revenue by, just claiming it's the market and things are slow, when realistically you have the ability to control your systems and your conversion rates and your numbers, at least to an extent. I get that the market is kind of out of our hands, but we can control the amount of conversations that are turning into apps, the amount of apps that are turning into closes, and we can do so by having a system in place. And the best part is that if you can get this going while things are slow, and you can be closing deals and self-sufficient while the market is slow, when the market picks up, this is your silver bullet. This is what's going to get you from your biggest years to doubling and tripling that. It's having these things while times are slow and that will make you absolutely boom on the other end when things start to pick up. If you're one of those people that does not want to continue, making excuses and blaming things on the market and things being slow, and you want to take your success into your own hands, I highly suggest that you get some systems in place and start focusing on squeezing more juice. My name is Nicholas Friel, founder of Media Simplified. If you're a mortgage broker or a mortgage professional and you liked this video, please feel free to like, comment, subscribe, share. Every little bit of support helps. If you're interested in working with us, feel free to click the link in the description below. And if not, I will see you on the next one.